what I found very interesting about this regional trade cooperation and supply chain alignment, as they call it, is that China and Japan are two of the top foreign holders of U.S. treasuries. And they're showing a clear pivot away from the U.S. economic influence. When you see these countries start to join together, it's something that should certainly be noticed. And again, here in Europe, we can see they're very uneasy here. Their trust in the West is totally eroding.
This is Kaiser Johnson with Liberty and Finance, and these are the Miles Franklin Weekly Specials for March 31st through April 7th, 2025, while supplies last. First this week, we feature 1 ounce Gold Britannia at just $59 over spot. Next, Silver Britannia are only $2.99 over spot. 1 10th ounce Platinum Britannia are just $29 over melt. And 1 10th ounce Gold Britannia are only $27 over melt. All of our specials this week are IRA eligible. To order our specials or any of the many other options we have available, call us at 1-888-81-LIBERTY. That's 1-888-815-4237. We're available after hours and on weekends, and we look forward to speaking with you.
Welcome back to Liberty and Finance. We're delighted to have this widely followed returning guest. Andy Schectman is the CEO of Miles Franklin Precious Metals. He joins us this Thursday. We're taping this on Thursday, April 3rd for this weekly market update. Andy is an international man of mystery. He's recording from an undisclosed location on the Eurasian continent. Andy, thanks for coming back on Liberty and Finance.
Yeah, it's good to be here. I'm actually in Prague today. And
there goes the secret. It's out.
I know. I blew the secret. But, Dunnigan, and it's really kind of cool because, I spent a few days in Rome and, walking through ruins that are 2,000 years old and walking through castles here in Prague. And, it's crazy that across thousands of years, as so many things have come and gone, civilizations and empires have collapsed and empires fell. But the one thing that remains constant, even here today, is gold. And I'm reminded of that as I walk through all of these historic places where gold has represented something significant to all of these civilizations, to all of these cultures. It's in today's world, which seems to be fractured on so many levels, its relevance is not just returning, it's accelerating. And I've kind of been overwhelmed with that feeling as I've walked around Europe. It's weird when the United States is celebrating its 250th birthday next year, July, and yet you walk around places here that are 2,000 years old, and it brings things into perspective. Yet everywhere you go, there are signs of gold and its significance. So I don't know, just kind of neat to say that because I think the more things change, the more they stay the same.
I've been to Europe numerous times, and it's that awareness as we come from the U.S. where we have a very shallow view of history locally, but there's a much deeper view of history. And it's funny because the coworkers that I've had from Asia, whether it's from India or China, they just chuckle when I say that because the civilization timelines go back, millennia there. But anyway, there's that depth of history. But exactly what you're saying, it's this natural relationship that has existed since like the beginning of recorded history between people and their desire to store the fruits of their labor in a way that they can take it with them through time and have it preserved not only through their own life, through rainy days, good seasons, bad seasons, times of plenty or scarcity, but also generationally. And that relationship is like a natural bond, and it's been there for so long.
Yeah, it's interesting to think that if you were fortunate enough to trip over a hole in ancient Rome or today in what used to be ancient Rome and find a gold piece, it would be as relevant and valuable today and as beautiful today as it was 3,000 years ago, not tarnished and not corroded, not destroyed. It's an overwhelming sense that I have had as I've walked around here. So I just wanted to kind of mention that because you don't see that historical significance walking around southern Florida, but you sure do walking around Rome and here in Prague, soon to be in Barcelona.
It reminds me of a quote from Stephen Covey, the author of The 7 Habits of Highly Effective People. Because what I mentioned is this natural relationship between people and their money, which is really just a way of capturing part of their life and taking it with them to the future. In the West, recently, just the last 2 generations or so, we've tried one of these radical experiments, these thought experiments of thinking maybe we can pull one over on Mother Nature and see if we can just make up out of our own imagination, out of our own willpower, which is fiat. That's what it means, just your will. I want because I say so. Something that's of lasting value, that's disconnected, that's divorced from the natural roots. And in fact, there was just an article, I wanted to bring this up to you, but it ties right in here. Our article just came out from Bank of America today, and one of my recurring clients passed it along saying the gold-silver ratio trading near a 2-year high, but don't expect it to fall anytime soon. So they're kind of poo-pooing the imminent rise of silver in the face of gold. But anyway, I remember, so that's the West. The West is just kind of whistling past the graveyard. Stephen Covey's quote is, "You cannot break the laws of nature, you can only break yourself against them." So anyway.
Right. Well, but let's not forget, in the case of the gold-silver ratio, that the market can stay irrational longer than we can all stay solvent. And that's really very true. Today is a good example. I mean, the market has been unbelievably volatile today. Gold was down $80 at one point, and about an hour ago it was actually up for the day, and now it's down about $27. So, when you talk about this whipsawing, yet only giving back less than 1% on gold isn't the case right now with silver, which is down $2 to right at $32 or just above. Certainly and I guess if I had to summarize it, to me, it's almost like there's a clear effort to flush the managed money out of their long silver positions on COMEX. And maybe it's to allow these commercial banks to cover at lower prices. I don't know, but certainly today was one heck of a volatile day, not just for precious metals. I mean, look at the markets themselves. The Russell 2000 index officially has entered bear market territory for the first time since 2022, and NASDAQ down almost 6%. And, the markets are getting clubbed. And then you have Secretary Besant saying, that the collapse of the market is not a MAGA problem, it's the MAG 7 problem. And we talked about last week on your show that the MAG 7, when you talk about the hedge funds having their lowest allocation to the MAG 7 in over 2 years, things are certainly starting to get very interesting, as they say, which of course is the Chinese curse. When you live in interesting times, these are not for the faint of heart, for sure.
Yeah, that's often I get calls from clients, especially newer clients who have just been told by friends or family or coworkers, neighbors, loved ones, that they should look into protecting themselves with precious metals. And one of the first questions they ask is, well, what's the difference between, should I emphasize gold or emphasize silver? And we often talk about gold being the premier asset for wealth preservation, that it just simply can't be outdone in that service, in that role, but that silver is unusually inexpensive relative to gold and potentially poised for outsized gains relative to gold if what happened in the last 4 major precious metals bull markets, according to Rick Rule, plays out again. Gold will have moved first, which it has, and silver will end up moving faster and farther in the end. But that along the way, you've got to recognize that it's likely to be much more volatile along the way. It can easily go up, in a volatile time, 25% in one month and down 10% the next month. And that would be just kind of normal for volatility in silver, whereas gold is going to be more steady along the way.
Well, let's not forget about the dollar, which has lost 35% of its purchasing power against gold in less than a year. And so it's not just the volatility we see in silver, but the volatility in the dollar too. And that's the thing people need to remember, is that we're valuing everything against dollars, but gold's rise of 35% just since the beginning of the year would signal that the dollar has lost 35% of its value against gold in the last year. And now you have the Fed pricing in a 70% chance of rate cuts in June, and the yield on the 10-year falling. again, you're looking at the potential of dollar weakness going even further and further and further. So, I mean, you make a very valid point, but I would also add to that this fiat system, as you mentioned, is beginning to show cracks, and it's this global confidence that's underpinning the dollar's dominance seems to be wavering a bit, especially with what Trump is doing with the tariffs and what the markets are saying. And when you see the Russell 2000, which is the broadest measure basically of the economy, all the small caps, the businesses getting hammered, I think it's time to buckle up a little bit. I'm not making a statement on where I think gold and silver are going, but I'm just simply saying that the markets are telling you right here and right now that they're concerned about what's going to happen the rest of the year.
And I'll take advantage of the fact that you're on European soil there to follow up on a story that's been brewing for the past month and a half, or at least, and that's this unprecedented flow of physical precious metals out of the London vaults into and out of the COMEX vault in New York. So now that you're over there, I don't know if you're stemming the tide, if you're going to slow that thing down or find out what's really going on. But do we have any new information since we spoke a week ago about the fundamentals that are behind this movement, this unprecedented volume of movement of physical gold and silver out of London into New York and then taking for physical delivery off both exchanges?
Yeah, we don't really. I mean, there have been articles, Bloomberg in particular today, I guess it would be today or yesterday, I'm not sure based upon being in Europe, but I read an article that I read today on Bloomberg that, more or less said, well, now that Trump said gold would not be tariffed, as we have said a million times, is that they're not going to tariff gold and silver. That was a ruse. That you saw the price fall off, and now you're going to see the exchange for physical. All of this stuff is gonna revert, and metal's gonna flow back to London. I don't believe that to be the case. Look, we've seen over 15 million ounces stand for delivery on COMEX this year, and it seems to be driven by some form of a whale. I mean, who the heck's got that kind of money? Who's got that kind of firepower? Question is it a foreign government? Who the hell is seeking physical delivery? And again, it's the rising distrust in the U.S. financial stability. I don't think this is going to end. At the same time, there was just an article coming up that says Germany, again, is now very, very concerned about keeping gold in U.S. vaults. They're concerned over the Western custodianship. And so, no, I don't think that we will see the metal flow back to Europe. And I don't know that we're really going to figure out what this is all about until we figure it out. There haven't been any clues really given other than we're supposed to believe it's all about tariffs, which I don't believe. That's what Bloomberg wants us to believe. I don't believe that it is. I think it's more along the lines of removing counterparty risk, and whether it be Germany removing the counterparty risk or the U.S. removing counterparty risk, reshoring, holding it in your hands. I think that's really what it's coming down to. It's about having it in your hand. It's the old saying: if you don't own it, if you don't hold it, you don't own it. Maybe that's really what it's all about. And no more paper trusts. I want it in my possession.
Well, it's reminiscent of Germany being one of the prominent countries that had asked for their gold back earlier, and were told that they were going to have to wait. Can you recap that for those who aren't aware of that story?
Yeah, well, they repatriated. They tried to get their gold back in 2013, and it took until 2017 before the gold was actually sent back from the U.S. vaults. But the bars that they had sent back had different serial numbers on them, and so the bars weren't the same ones that they sent, which caused a whole lot of concern that those bars they had done something with those bars, and took them 4 years to come up with bars to send back to Germany. What does that really say about custodianship? I mean, it's supposed to be the bars that were put in there, the bars that are returned. So I think it is a very big deal, 100% so. But it's not just about gold, too. I mean, it is silver as well. China is a good example. We've seen just in the last week in Shanghai, their vaults grew by almost 53,000 kilograms of silver in the last week. Their total holdings are now up to almost 1.75 million kilograms. So you have 10% year over year increase in China's silver imports. So it's not just gold, it's silver as well. And it's not just the US, it's not just Europe, it's China, it's India, it's Russia. There is a massive drive away from promises and into things that are tangible in your possession. And Germany is a good example of that. But if you look at, you can see this everywhere. I think that this is something that people should really try and understand. What Trump is doing here is eroding confidence. Now, I'm all for him and what he's trying to do, but he is eroding confidence on many levels by many of the players that will start to say, you know what, maybe we need to rethink whether it be the United States or anyone holding our assets, we'd like them in our own possession. And that's kind of what you're seeing, this weaponization of money through sanctions, through asset freezes, or any politicized financial tool like a tariff. These are backfiring as far as I'm concerned as trust is collapsing. So, the question is, are these diplomatic acts or are these signs of desperation? I don't know, but certainly something to keep an eye on for sure.
Well, another option in your is this a desperation or a diplomatic act? Also, just Trump's signature MO is the art of the deal, which involves being unpredictable, leaving his options open, leaving people not able to guess whether he's bluffing or not. That's been nothing new from him. That's been lifelong. We interviewed constitutional attorney Dr. Edwin Vieira, and he said prior to the election that Harris would have been a catastrophe for our country, but Trump is a calamity. And by calamity, I think he just means the random factor, just the X factor. And for people who are diehard Trump fans, they say, that's right, our boy keeps them guessing. But for people who are in charge of stewarding the tangible asset reserves of countries, it's certainly that kind of unpredictability and chaos can result in more of a tendency towards saying, I'd rather be holding it myself, thank you very much, rather than trusting on the future predictability and goodwill of the London vaults in cohort with the U.S.
That's exactly what it is. 1,000%. You nailed it. That's what it is. And I think that's something that's not going to, that concern isn't going to mitigate anytime soon. I think it's only going to accelerate. And that's what we're seeing by everyone trying to.
Like maybe during his third term, you mean?
Yeah, exactly. Well, that's just
discussing. Speaking of unpredictability, yeah.
Yeah, well, look, I mean, I think what you're basically seeing is that sovereignty begins with no counterparty risk. And that's really what this all boils down to, is that you can think you have sovereignty, but if your positions are filled with counterparty risk, how sound is that sovereignty? So I think that's kind of what it's coming down to. And his actions, whether they be benefiting the American public or not, that's, I'll leave that up for debate. What I will say is that a good portion of the world believes that it's not. And so you're seeing, that's why I say, is this the act, or is the world viewing this as the act of desperation of a declining empire? I don't know. Are they? Kind of feels that way when you look at the pushback that you're seeing, especially here in Europe. They're very angry. And, this is just beginning. See, things that this is the first day that the tariffs were announced.
Yeah, it's a very good point. It's been a while, maybe between a year to 2 years since Putin's speech, and then some heads of state from Africa speech, and basically all saying the same thing, which is those of you who have made their past plans about your economic well-being and your financial well-being based on trusting the U.S. dollar and the U.S. Treasury, you better make other plans. And
that's exactly it.
I don't see a pivot currently from that, now that Trump's starting to reveal his hand by the way that he's making decisions. If anything, it seems like it's accelerating based on the physical metal flows that you've been describing to us.
And the only other thing I'd like to say, when we talk about gold at all-time highs yesterday, above 3150, and here we are today with all this volatility at 3110 or so, yet there's eerie quiet in the market. There's no headlines. There's no retail euphoria. Quite to the contrary. This is not a bubble at all. This has been stealth accumulation. And the funny thing is, to your audience and to you and I, well, what do you mean stealth? central banks are gobbling it up, right? And all the big money is standing for delivery. But take a step back from YouTube and try and find that. Watch Fox and spending a few days in Rome last week. I was stuck with the only American-speaking channel was CNBC. I wanted to pull the hair out of my head, but I watched it for a while, and I mean, you wouldn't know that gold even had a heartbeat as it's continuing to rise and rise and rise and rise, and so it's very interesting when people are wondering is 3,100 the top? Some analysts calling it top. Well, you got banks right now talking about 4,500, and including some very large banks like Bank of America and Goldman Sachs. So, how are we near the end, or is it just beginning based upon the lack of retail involvement, the lack of no headlines on the media? This isn't a bubble at all. So yeah, I think this is a natural pullback. It's gone straight up. It needed to exhale a little bit. Certainly did, but yet you can see a market that was down $80 this morning has roared back 50. In fact, it was up positive at one point about an hour ago. So it's volatile still, but here we are, and not even down 1% in gold after an $80 decline earlier in the morning. Crazy times, to say the least.
Any additional points of new research from you before we turn to some client testimonies that were submitted prior to your arrival here?
And not a lot. One of the things that I found interesting, I kind of detached for a few days, so I power read over the last 2 days. One of the things I found interesting was 2 days ago or 3 days ago, you had Japan, South Korea, and China held a trilateral meeting called Economic Dialogue, and it's the first one that they've had in over 5 years, and they are pledging joint responses to the U.S. tariffs. What I found very interesting about this regional trade cooperation and supply chain alignment, as they call it, is that these China and Japan are two of the top foreign holders of U.S. treasuries, and they're showing a clear pivot away from the U.S. economic influence. When you see these countries start to join together, it's something that should certainly be noticed. And again, here in Europe, we can see they're very uneasy here. Their trust in the West is totally eroding. And one of the things that there was a long article that I read just the other day here in Europe, and is that you have nations not only racing to get precious metals, but also all critical minerals from copper to zinc to nickel. There's a drive to get tangible assets globally. And when you see Japan, China, and South Korea come together and say, hey, we're going to work together to sidestep U.S. sanctions and U.S. tariffs, that's not a good sign unless, look, you could look at it that way, or you could look at it like Bill Holter does. I had a long talk with him, and he's like, look, between the Doge cutting, the layoffs, which the U.S. government their spending accounted for over 30% of GDP. You're laying off thousands of workers. You're putting on tariffs, which will slow down business. You're all of that money that's been in the system the last several years, which you could argue has been illusionary, certainly seems to be coming to an end. And what does that mean for the markets? Is that why the markets are getting crushed today? Do they see this coming? Are they trying to, you look at what Percent says? This is not a MAGA prom, it's a MAG 7 prom. Are they trying to bring on a controlled demolition of the markets? Well, and bring rates way down because a recession is coming? Well, that's what Bill would say. There's a million different viewpoints that you can take on this right now, but the bottom line is that you could argue things are just starting to get interesting. Things are just starting to get concerning. So other than that, no. I mean, I guess the only other thing that I would say about today's move is that I really do believe that this was kind of another one of the Hail Marys to flush managed money, which was very long, out of their long silver positions in particular. We'll see what happens tomorrow. I would guess we'll see the price start to move up again.
In the face of all of this day-to-day volatility, there's the inexorable march of the dollar lower, which is reflected as you've described in the price of gold when priced in dollars being upward in the long term. We had a significant buyback from a long-term loyal client this week, and she was extremely expressive of her gratitude to you, to Miles Franklin, to my sons and me, for being there for her and for her family by putting her savings out of the bank and into metals over the past several years. She was able this week to raise enough that she's going to be buying townhomes for 2 of her daughters. And she said, I could not have done this without Miles Franklin, without the Liberty and Finance team and everything. And to pass along, to you, thanks for the role that we've played to serve her and serve her family generationally. It touched my heart, and it made me realize what you were saying about being there in Europe and seeing that long view, that longitudinal view of history, and realizing this is a generational way of protecting and preserving. In our Reluctant Preppers background, we talked about, make sure you've got water and food. In fact, we just got a phone call. I got interrupted from a workout today by a phone call, a robocall from our town water department saying, hey, we had a technical problem at our main processing plant, and so nobody should drink the water for the next 48 hours. Boil the water for at least 2 minutes, just don't drink it, And we're thinking, oh my goodness, lucky we put in a whole house water filter, a reverse osmosis under the counter system in the kitchen, and we've got plenty of bottled water stored up and that kind of thing. But that's just day to day. But when you talk about long term, it was just so gratifying to hear from a real life client. And this happens every week. I don't always pass them along to you, and we don't always bring it up on air here, but just to pass that along, that what an impact this has made in the life of her family.
I appreciate that. It means a lot to me. And this is what I've always said about when the people say we're talking our book and all this stuff. I often wonder if any of these people have ever owned their own business, that, the ability to run a good business and do the right thing and try your best to help people, to go to bed at night feeling good about what you did, to look your family in the face, your kids, and say, I tried my best to make a difference, to be a role model to your children, to work hard, to do something the right way, is something that I find to be as gratifying as just about anything I can explain. And thank you for sharing that with me. It means an awful lot. It's weird. I've been doing this for 35 years, and it's just nice to know that I've helped some people, and I have tried. I really have. I hope people understand that I have tried my hardest to do right by people. I wouldn't put myself out here every single week with you and every day online, as being a cheat, because that would certainly be exposed very quickly. So I don't even know how to react to that other than to say thank you and thank whoever said that. It means a lot to hear that, and certainly makes it all worthwhile.
And I always want to make sure we hit on the specials so that those who may not yet be subscribed to our free newsletter, so that they would get the specials in their inbox, will know about them. So let me just pop them up real quick here. I'm going to share.
1 ounce Gold Britannia is $59 over spot gold. I mean, that's what you'll pay for a 1 ounce gold bar. So for a 1 ounce gold coin, you're not going to get a better price, period. 1/10 ounce Gold Britannia, 27 over melt per coin. Again, this would be for barterability, tradability, functionality. Again, $27 over melt. You're substantially cheaper than just about any other 1/10 ounce or any fractional gold alternative. So whether you're playing poker or driving on a crowded highway or investing, you can never have too much flexibility, too many outs, too many exits or options. So I do think everyone should own a little bit of the smaller size gold, 1/10, 1/4, 1/2, 10th being the best. Love it.
Just as long as we're on the word $27 over melt per coin, we very frequently will get questions from viewers. What's the difference between spot versus melt?
Yeah, well, I mean, spot denotes 1 ounce. Spot gold is 1 ounce of gold. And so when you say spot divided by 10, that would be a 10th ounce. So it's easier just to say melt when you're talking anything greater than or less than 1 ounce. So if it were 2 ounces, we would say over melt, because it's spot gold times 2. Now, again, some people would understand the implication if you just said spot, but I choose to say melt if it's greater than or less than 1 ounce. So if it was a quarter-ounce coin and it was $40 over melt, you would take the price of gold, divide it by 4, add $40. Same thing here. You take the price of gold, divide it by 10, add $27. And so it's from a standpoint of fractional coins, that's about 8-9% over. You'll pay close to 10% more than that, if I'm not mistaken, for a 10th ounce gold eagle, or pretty darn close to that anyways, maybe 6-7% more. But from a standpoint of value for a fractional coin, that is as good as it's going to get. 1/10 ounce platinum, yeah, same thing, $29 over melt for a platinum coin. And you know, the market or the spread or the difference between gold and platinum would be such that we would think value-wise that platinum would be an extraordinary value. It has, again, like we were saying earlier, the market can stay irrational longer than you can stay solvent. From every single metric historically and price-wise, platinum is a hell of a value. $29 over melt for a 10th ounce Platinum Britannia. I love that as well. Silver Britannia. Again, this is a Britannia special week, I guess. $2.99 over spot per ounce on the Silver Britannia. Again, you know, for a 1 ounce silver coin, that's on par with what you're going to find on the best values for a 1 ounce silver coin. And the American Eagle now is almost $2 an ounce, or about $2 an ounce higher. So it's a beautiful coin. It might actually be in my mind, the most artistic silver coin. Beautiful, and boxes of 500, $2.99 over spot or over melt, however you want to call it, for the 1 ounce Britannia. Love that as well.
And finally,
we've had this for a while now, and it's interesting because for almost a year, couldn't find any of the Kilo Valcambi bars. $2.20 over spot per ounce. Take spot, add $2.20, and multiply it times 32.15. They are as beautiful of a silver bar as you will ever find, individually serialized with documents of authenticity, boxes of 15. I love the Valcambi bars, and I own quite a few of them myself.
Those are the weekly specials, folks. If you don't want to ever miss out on the weekly specials, just get on our free mailing list, and it's completely private. We don't share your email address with anyone. You just go to libertyandfinance.com. That's libertyandfinance.com. Put in your name. No, you don't even have to put your name, just your email address, and click submit. You'll get a confirming email. You need to confirm. Once you do, you'll get 1 email per day in your inbox with our latest interviews, including all of the weekly market updates with Andy and all of the weekly specials. You won't miss a thing. It's all free and it's all private. And
so I come home next week, Wednesday. Maybe we could do a Thursday night live stream. I'll leave that up to you and your operations and see if we can do it or just do a recorded one like this. I appreciate, for the last several weeks, I've been all over the place and you've been very kind and pivoting with me. So I appreciate that. But I'll do my best.
Man of mystery moniker, yeah.
Yes. Well, between Ottawa and now Europe, and it's been a lot of traveling, but always happy and try and make these, and nice to see your face and to catch up and talk about what's happening in the world. So much seems to happen in the span of just a few days. I couldn't believe just how out of touch I felt by letting a couple days slide, but appreciate you having me and look forward to picking up where we left off next week.
Yeah, and your point is well taken there about the crickets, the tumbleweed silence in the mainstream financial press in the U.S. about gold hitting all-time highs and breaking through and being better performing than the Treasury and obviously better performing than the dollar and so on. Silence about that. So, that probably means something to most of our audience who have learned over time that whatever is said out of Washington probably means exactly the opposite, and whatever is not said out of Washington is probably what you better be talking about. And we're grateful that you're here with us talking about it, Andy, on Liberty and Finance. Thank you.
You stay well. You too, everyone.
This is Kaiser Johnson with Liberty and Finance, and these are the Miles Franklin Weekly Specials for March 31st through April 7th, 2025, while supplies last. First this week, we feature 1 ounce Gold Britannia at just $59 over spot. Next, Silver Britannia are only $2.99 over spot. 1/10 ounce Platinum Britannia are just $29 over melt. And one 10th ounce Gold Britannia are only $27 over melt. All of our specials this week are IRA eligible. To order our specials or any of the many other options we have available, call us at 1-888-81-LIBERTY. That's 1-888-815-4237. We're available after hours and on weekends, and we look forward to speaking with you.